Hello and welcome to The Global View, the show where we look at ways for investors to make money beyond the ASX-listed universe. I'm your host, Olivia Grace Curran. We had a negative night on European markets. US stocks finished in mixed territory, with the Dow snapping a 10-session losing streak, its longest in 50 years. Stocks tumbled in the previous session after the Fed forecast just 2 25 basis point cuts in 2025, half a percentage point less than its September forecast. Bank stocks rose following a rise in Treasury yields. Micron Technology slumped following its forecast of quarterly revenue and profit below estimates, while Marvell Technology and Moderna rose. Homebuilder Lennar fell after reporting fourth quarter results below estimates. FedEx shares soared after the bell as the parcel giant announced a spin-off of its less-than-truckload business. Shares of Nike jumped after the bell after posting smaller than expected drop in second quarter revenue. The number of Americans filing jobless claims fell more than expected last week, almost reversing the prior 2 weeks' increases. Initial claims dropped to a seasonally adjusted 220,000 for the week. And existing home sales surged 4.8% to an 8-month high in November, with more buyers entering the market as the economy continues to add jobs. Meanwhile, the US economy grew faster than previously estimated in the third quarter at a 3.1% annualized rate, underscoring the Fed's view that the economy is in good shape, although inflation remains elevated. The solid economic data and the Fed's outlook for rates has seen longer-dated Treasury yields hit multi-month highs. The yield curve has steepened, with the spread between 2- and 10-year yields the widest gap in 2.5 years. The US 10-year yield hit its highest since May at 4.57%, and the 2-year fell to 4.29%. The US dollar has pulled back slightly. The Aussie has recovered slightly at 62 US cents. And the British pound has weakened after the Bank of England kept interest rates on hold at 4.75%. Governor Andrew Bailey said the central bank needed to stick to its existing gradual approach to cutting rates, saying after a pickup in wages and prices last month that with the heightened uncertainty in the economy, we can't commit to when or by how much we will cut rates in the coming year. And Bitcoin has continued to fall in the wake of the Fed outlook to be sitting around 97,000 US dollars. Oil prices have fallen after central bankers in the US and Europe signalled caution over further easing of monetary policy, fanning concerns that weak economic activity could dent demand for oil next year. Brent crude futures down 0.7% to settle at $72 a barrel, while the gold price has made a modest recovery, having tumbled in the wake of the Fed decision. Spot gold up 0.4% at just under 2,600 US dollars an ounce, while copper is down almost 2% and iron ore is around 0.8% lower at just over 101 US dollars a tonne. For more on what's moving in the US markets, I caught up with Peter Cardillo from Spartan Capital a little earlier.
Well, obviously, it's turned bearish somewhat, but I don't think we're in for any major correction at this time. We've had a pretty hefty decline yesterday, which was led by the Dow and, of course, Nasdaq and the S&P as well. Today, we had an attempted rally, but that rally fizzled out. And I think there are two reasons for that. One, we have quadruple expirations today, and we also have the PC price inflation index, which most likely we're going to get some sort of negative news in terms of inflation. We'll probably see a hike both in top and core rates of about 0.2%, confirming basically what the Fed said and what we all know, that inflation remains elevated and somewhat sticky. So I think those are the two reasons why we saw yesterday's attempt actually fizzle out. And so investors are, pricing in now what the dot plot seems to suggest, that we're going to have only 2 rate cuts next year. And I think there's another debate out there, and that debate is that there's a good possibility that the Fed may not cut rate next year. It all depends on how inflation goes, and also whether or not the new administration implements the tariffs. If the tariffs are hefty, all bets are off for the Feds to cut rates next year.
And so what does this mean for the outlook for 2025? Has the atmosphere changed?
As of now, no, because if you look at some of the macro indicators that were released yesterday, in particular the final revision of third quarter GDP, it was actually revised up to 3.1%, and consumption was bumped up to 3.7%. So you still have a consumer that's quite healthy, and it looks like that we're probably going to end the year with an annual growth rate of somewhere between 2.7, 2.8%, which is, a solid pace of growth. And that means that corporate earnings for the fourth quarter are probably going to be in line with market expectations. Of course, after that, then it's a different ball game. So I think for the first quarter of 2025, market sentiment probably remains tilted to the positive side.
And we've seen bond yields rise in the wake of the Fed's decision. What are you seeing, and what do you see for 2025 in fixed income?
Again, it all depends on inflation. It all depends on tariffs. And, yields have spiked up. The 10-year closed just above 357 today. And I suspect that with the cautiousness that's being displayed in the bond market, that this run in yields is probably going to extend. And if you look at the long end of the market and the short end of the market, you see that it's steepening. And so there's a good possibility that the 10-year can knock on that 475, possibly even 5% in the first quarter of 2025, which could be a sticky point for equities.
And there's expected to be a big focus on the US dollar. We saw the Aussie dollar take a tumble because of the Fed's decision yesterday. How do potential trade wars impact currencies in 2025? How do you see them impacting? And do you see the US dollar weakening at all?
No, I don't see the dollar weakening. In fact, I think the dollar index is probably in the very near term headed for 110. And I think, the fact that the Feds have turned hawkish again, the fact that there's a possibility of tariffs, that all of that would strengthen the dollar. Now, why would tariffs strengthen the dollar? Obviously, it means that the Fed would probably, not raise rates, and possibly even have to raise rates. And so the spread differential between the U.S. and the rest of the economies continues to widen in favor of the U.S. currency. Does it have some negative effects? Of course it does. Our exports obviously are going to suffer even more than what they're suffering now. And the good news is that the inflation from an imported viewpoint is contained. And so I think the dollar remains strong.
And oil prices are likely to be influenced by those supply and demand factors. What are you seeing for the energy sector in 2025?
I don't think we go much above $80. I don't think we go much below 60 or 65. It all depends on the health of the global economy, and that is the demand factor, obviously. And so far, the question point remains with China, and we have not seen any real major turnaround in the Chinese economy. So demand is probably going to be sticky. And then, of course, the new administration, their policy is going to be to drill, and that means even more supplies on the market.
And let's just quickly look at metals. So gold suffered in the wake of the Fed's decision. How do you see prices remaining for 2025?
Well, I see gold at surpassing 3,000. Right now, it's in a pullback, and that's because of the strong dollar and higher yields. But let's not forget that if inflation ticks up, that's going to be a positive for gold, and the geopolitical situation. Now, rightfully so, Trump has been calling for a deal with Ukraine. We'll probably get that, but the situation in the Middle East is far from settled, and I don't think that's ever going to be settled in the near term. And so that's another positive for the metal. And China recently was a big buyer of gold. It re-entered the buying market, and I suspect that other central banks, such as Switzerland, Germany, and even the United States, are probably going to be buyers of gold in 2025.
And just before we go, getting one final check on where the local market is set to open when trade gets underway. SPI futures down by 51 points. That does it for this edition of The Global View. Stick around, the open is coming up next.